What's up, everybody? Happy weekend to you. A little premium content. Um, Selling premium is something that I definitely want to do, and it's going to be an integral part of being able to navigate the markets and hold down a full-time job. So um, I'll just look at the prices now, and I'll just be real honest. I don't have a lot of cash for this week, you know. But anybody who's followed along for a little while will know that um, there are times when there's not much on the screener, and I can lock in some profit here, uh, guaranteed money, kind of like a paycheck, kind of um, on a weekly basis. Okay, so for the expiration dates, I'm only looking for October the 20th, which is Friday. Okay, so I'm just going to use this account here, which is just our little bitty account, but it's got an options chain in here, and I'm only going to be an options seller, which means that when we write these contracts, we will collect money. Okay, so we're not paying any money. We're going to collect money. Okay, so Hawaiian Electric is a company that I own in my uh, main account, and uh, it's obviously been smashed, right? And I think I might have got some even up here in the 30 RSIs. Um, so my average is way out of whack. So I'm not able to sell any calls against my stock unless I'm willing to take a loss. And spoiler alert, I don't lose. Okay, so that's not happening. So in the meantime, I can actually sell puts that will allow me to buy another 100 shares to lower my average, right? You can see we're just real sideways here. We're in the chop, right? But there's an opportunity here if you look at the options chain, in my opinion. The trade price is $12.30. So if I say on Friday, if it's below $12, I'll buy it for $12. Okay. So if you're not familiar with selling options or something like that, you should go do your own research. I'm not a pro at this, but I've sold a lot of premium and it works. But I just, when I was more into the charts there on a daily, intraday basis, I just enjoyed trading. That's just what I enjoyed. Um, but you can see for $12.30 is the current price. But for $12, which is less than the current price. So if I was willing to buy 100 shares right now for $12.30, I'd probably be willing to buy another 100 shares at 12. That's even cheaper, right? So that's what 2.5% below the current price, right? So if the stock goes down 2.5%, I'll take it off your hands. Now, what happens if the stock price goes down a little bit? Maybe it goes down to $12.10. That's down 1.5% in a week, but it's still above this strike price of 12. I keep all the premium. What happens if the stock goes flat? It just is $12.30 on Friday. Friday's close. Well, I keep the premium. What happens if the stock goes up? Like I think it will when I bought it crazy, like double this price. I keep the premium. So you get the idea that you can, what some people would call, lose on a trade like this. But really, you're just going to have to buy stock for more than what the current trading price is. So let's say it does another crash. So it's $12.30 and it goes down to $8. Well, on Friday at the close, I still have to buy it for $12. Okay, because that's what I'm writing. Another thing is too is we don't know if these orders I'm getting ready to put in will fill, but typically they do. And I had my mom doing this for the beginning part of her retirement. Just on Sunday, you just put your orders in and set it and forget it kind of thing, right? It's not 100% up they always feel, because sometimes Monday morning, those stocks will gap up or whatever, and I'm not going to be able to look at it because I'll be busy doing other stuff. So um, it's important that you're comfortable with the math that you agree to. So for this particular example, my cost basis is way out of whack. So I need to buy some more shares. Okay. Um, the $12 strike, the last sell was 29 cents. Now each contract is actually 100 shares. So $29 is what I'll collect for each contract. So however many contracts you can afford or want to do. Um, but just like the other systems, I don't recommend going in crazy heavy, because you don't know what will happen after that, right? Like, had I done this strategy and I bought 10 contract, or I sold 10 contracts when it was $24 a share. Well, that would be my cost basis, and it'd be really hard. You'd have to have a lot of money uh, to lower your average to get yourself in a position where you could sell calls and get out of the position. Because ultimately, that's the goal: is to sell the calls close to the money so that you actually do get out of the position. Okay. Um, but if I collect $29 and I'm risking $1,200, that is a 2.4% return for 1 week. There are 50 weeks in a year. So annualized, that would be 120% a year. And that is a fantastic return. Now, the beauty is that if this actually does fill my order, then I will get that money on Monday, right when the order fills. They'll put the money in my account, and I can immediately do whatever I want with it. Now, as we talked about earlier, this is going to be a really good source for founding my foundation. So with my trades and premium and everything like that, I divide them into 4 buckets. So remember that poor people make $1, they spend $1, right? And rich people make $1 and they spend 50 cents. But wealthy people make $1 and they only spend a quarter. Okay. And I'm going to go ahead and put this order in for Hawaiian Electric for a 2.4 potential. Looks like 30 cents because my brokerage is jank. So we'll go ahead and put it in for 30 cents. So 30 into 1,200 is 2.5 times 50. 125% annualized returns. So I'm down for that. And like I said, I do have a little bit of a money crunch. But if you followed the public account for YouTube, you have noticed probably that we have been doing some buying and selling here. Let's go ahead and put this alert here just so we know. We want it right at $12. Oh man, I'll never get it exactly. Can I just edit it? No shot. I think it helped if I scrolled into. Oh, come on, man. I could add an alert, but I really don't want to do that. I guess that's just going to have to be good enough. But $12. So we've agreed if the price on Friday closes below that, we'll take 100 shares. All right. This is a screener, and like I said, I don't have a lot of money. But when you're a leader, the worst thing you can do is nothing. Okay, so there's an old saying, lead, follow, or get the hell out of the way, right? So even if I'm only leading me, I'm leading. Okay, make no mistake about it. I've got goals, we're going. So if you're coming with, come on. And if not, get the hell out of my way because I'm going. All right, so um, some of these, like NUS, would be a prime candidate, but the problem is, and I guess I can illustrate it real quick. There's not a lot in this options chain. Okay, not every stock is really big on options. Okay, and you can see the issue is the strike prices. So the current price is $18.35. Well, if I'm going to sell premium, uh, yeah, okay. I've never looked at this platform before. It's got me a little confused. If I'm going to sell premium for $17.50 minus the $18.35 current price, that's an 85% or 85-cent difference, um, which is 4.6% away from the current price. It's too far away. So you can see here, there is no premium. Anything less than 1%. So we'd be looking for like 18 cents, right? And it's only 13. There's just nothing there. That's all I'm trying to illustrate. You can do the math ahead of time. So there's no real surprises with writing premium. Um, but the one that I did like was EVIX. And we've been buy sell this thing. And I wanted to share this because with low share price, $6.49, it would only cost $649 if I have to buy this product. And if you look at the thing, we get a nice solid dividend. I do not own this in my yet, but nice PEs. The debt's reasonable. Got some funky stuff going over here, but overall, it looks okay. Okay, so if you come over here, I'll illustrate that. I need to get my spreadsheet updated over on this other screen because we sold premium for, well, the computer just wants to lock up, so I guess we'll just hang out till it's ready. All right. And we ended up selling for $30 per contract. So if you sold multiple contracts, you'd have to multiply that number by the premium, right? So on EBIX, you'll see here the current price is $6.49. So if you're willing to, you really want to buy this thing, what in the world is my computer doing? Is Trump invading my space here? Get out of my screen. And you really want it at 650. This is in the money. You can see the last purchase was 68 cents, which is pretty insane. So 68 into 6.5, that's a 10.46% return for 1 week. Times 50 weeks in a year, that's 523% returns. Now, obviously, this opportunity is not going to be available to you every week. And for me personally, I'm not that hungry to get this stock because I don't own it in my current portfolio. Okay. So I'm saying I will buy this thing if it gets to $6. Okay. So 6.49 is the current price minus $6. That's 49 cents difference, right? So that is 7.5% away from the current price. So if the stock price drops 7.5% in a week by Friday's close, I'll take 100 shares at $6 a share. And for my efforts, you'll see here the last was 34, and looks like I'm gonna do mine for 35. And I'll go ahead and put the order in here. And we'll do a little quick math for a little big picture here. So EBIX one-stop shop. So you guys can see I don't spend a super long amount of time on stocks, but I share what I got with you. So 35 cents what we collect, which is $35 for 100 shares, divided by $600 if I have to buy the stuff. So that is a 5.8% return for 1 week, 50 weeks, 290% return a year. So when you find a stock that's got a volatility and you get a 5.8% return for 1 week, yeah, I'm excited because if you think our best weeks even doing the 1% flips, it's hard to get 5 or 6 with the same exact money. And another thing too is that with a small stock price of $6, I only really have to have $600, and I'm gonna collect 35, right? So you really only need 565, right? And that would be your cost basis. So it could continue to drop after that, but this is a little bit of a premium grab where you do a stock that you wouldn't mind having, but it's at a point of extreme volatility, so that makes it risky. And when people get scared, they buy insurance. And today, I tried to sell insurance to owners of 2 different equities, so Hawaiian Electric and EBIX. Remember, this is not official financial advice or whatever. I'm just trying to share with you guys different ways you can hit the market when you're not able to look at the screens. And my goal is going to be to not look at the stock market at all during the day. I do have some alerts set, so if an alert happens to pop or something like that, uh, you know, I might put a sell order in or something like that. But for the most part, I'll be focused on other stuff. And if an alert pops and I'm busy, it's okay. And you'll get to see the journey with me too. I hope you're enjoying this main account share here. And you can see out of $1,800 risk that I would buy shares, I'll collect $65. So that's the wrong math. 3.6% return blended. So if I do multiple contracts, you got $65 for 1 round, but say you wanted to do, I don't know, 20 rounds, that's $1,300 a week, and that starts to get you where you're getting somewhere. But hang tight, stick with the program, and I think you'll be interested to see when the market turns around and we're more selling calls versus puts. That stocks that we would normally flip for 1%, we could make a lot more. And if you don't have, I put 1,800 at risk, just to stay in the game. Um, but I'm not overextended by any means. So if you don't have that, just stick with the YouTube account. I mean, you can still watch and learn, but using this as an example with extreme volatility, if you say we bought this thing at 649, we would be trying to sell it for 655, right? But if you had it on the call side here, uh, strike is over here, 650. So you could actually sell it for 650, even though you bought it at 649. You say, well, shoot, that's only a penny. But you could actually collect $45 in premium. Okay, so instead of making 6 pennies, you would make 46 pennies. Okay, so 46 into 649, you would make a 7% return in 1 week by selling right at the money, you know. And if you look at option selling and stuff like that, a lot of people go to the, they want the 10 deltas or the 20 deltas, so they want 90 to 80% chance to not get executed, to not have to take the shares. They just want the quote unquote free money. But I don't really like that. I really like to collect a good amount of premium and just incorporate it to my normal strategy. Whereas, yeah, maybe I would have hit my 1%, but it didn't stick by Friday. Maybe it just popped a little, and I'm stuck with the shares. But I can collect a premium every week. So I'm happy doing that because all the stocks that we buy are undervalued, going up, minus the swing trade stuff, which is just purely technicals. But those are all the super cool companies that will always make new time highs until they go out of business. And they're at the 30 RSI spike sideways, and they've made a breakout to the upside. So they have momentum up, and they're not at the all-time highs. So it's a relatively safe way to do it, even though anything you do in life has risk, you know. I've seen Joe Biden try to ride a bicycle. I mean, everything is risky, you know. I think that's all we've got. I don't know. If you've got feedback, uh, I'd love to hear it, and because I want to see if some of this stuff I'm trying out is actually of use to anybody. And we'll go ahead and put our last one here. We'll add her here. And let's see if I can find $6. 601. See it? What the hell is this? They just troll the hell out of me, don't they? Oh my god, I got it, maybe. Think. Alright, $6. And we'll put it up here with the others. And you can go into some, support resistance, all that stuff. A trend line rule says down, break a trend, down, anything can happen. So it's a really good spot, my opinion. But when you're collecting a 5% free every week, you're going to have more money to keep averaging the thing down, right? So that's just the way I approach it. I like the dividends and stuff. So we just keep on keeping on. We're not afraid, just keep pushing. All right. So we got this one and we sold. We can color code them, I guess. So what we do, we got premium on this guy too. So that's that. I don't know how much. Let's see how much time we got soaked into this thing. 24 minutes, but that's a lot of me rambling. I already had it kind of figured out what the hell I was going to do. So I hope it's helpful to you. Don't just jump in if you don't understand it. Learn about it a little bit. But again, just offering some knowledge that I wish somebody had showed me. Like if you're going to have be a long time owner of Coca-Cola stock, you could just collect a weekly check while you buy the stock. I mean, it's kind of a no-brainer, but you have to really want the stock. If you're treating it like a trading game or something like that, it's a little different, so you'll have to understand your risk. But if you're wanting to buy 100 shares anyways, might as well get paid. So I hope it's helpful to you. Have a great rest of your weekend. I will not look at a chart until Monday morning. So we'll see you then. Have a great day.